Good afternoon and welcome everyone to this afternoon session of Organizing Your B.A.I.L. We're going to give it a few minutes and let people come into the main virtual room before we get started. But good afternoon and welcome. All right, our numbers are ticking up. Good afternoon again for this live webinar series of Organizing Your B.A.I.L. Today, we're going to be featuring our accountant and CPA. Thank you for joining us this afternoon, and we will get started here shortly. We're going to give it a few more minutes. The numbers are still ticking, and let a few more people come into the room, and we'll get started. All right, good afternoon, and welcome to week 2 of the Capital Readiness Program's Organizing Your B.A.I.L webinar series. My name is Sonya Bigelow-Smith, and I'm the director of our Capital Readiness Program, a 4-year initiative to empower small business growth and improve the capital readiness of small businesses. On behalf of our president and CEO, Sharon Roberson-Pender, we extend a special greeting and commendation for your attendance today. You all may not know, but we have a host of resources here at CRMSDC, from minority business certification, matchmaking opportunities with the private sector and government contracting, and business development assistance through our Virginia MBDA Business Center. If you want to learn more, please visit our website at www.crmsdc.org. Once again, I hope you all have your brown bag, lunch, a beverage, and a snack with you as we get ready for an engaging conversation. Organizing Your B.A.I.L has been designed very intentionally to expose and reinforce the importance of having these professionals on your team: a banker, an accountant, an assurance agent, investors and funding options, and a lawyer. In fact, having an accountant on your team is crucial to properly growing and scaling your business. Before we kick it off, let me start with a few housekeeping items. This session is being recorded and will be available to you within 24 to 48 hours. My teammate, Amanda Bill, our program coordinator, is standing by, monitoring the chat today, and will monitor the Q&A box at the bottom of your screen. Say hello to Amanda in the chat and tell her where you're dialing in from. And please be sure to put your questions in the Q&A box so that we can properly monitor and get to as many questions as we can. So let's get started, and let me introduce you to our moderator today, Miss Maria Randall. Maria is the president and CEO of LLADNAR Services, a consulting firm partnering with the Capital Readiness Program this year, specializing in assisting small businesses shore up their financials as they prepare to seek capital. With her years of experience as a banker, and you'll see it come through this presentation, and her engagement with our presenter, I am sure you all know that she has seen dozens of financial projections and loan packets, and is the very best person we could have to help moderate today's series. Welcome, Maria. How are you today?
I'm fine, thanks. Thank you,
All
Sonya.
right, good. Well, I'm going to turn the virtual room over to you now, as I do, but tell us, and I'm going to just come on screen with you here. Tell us a little bit about yourself and tell us about your journey.
Oh, well, thanks, Sonia. And actually, you said it all. I feel like I was a banker for a long time. I was a small business lender for about 25 years, and most of the time as an SBA lender. So that's kind of my area of specialty, SBA loans. But I decided to form LLADNAR Services, which is an advisory and consulting firm, to help small businesses navigate that loan process, because we know, it's great that there are all of these programs available to help folks with accessing capital, but really to understand how to get through that process, how to get prepared, how to be capital ready, like capital readiness program is the mission of to do. That's where the assistance is needed. And so I thought I would take my years of experience and reviewing lots of loan applications for businesses across multiple industries and share that and help folks and give them some inside information to help them better be able to get through the loan process and hopefully get to an approval more readily. So, so thank you for this whole series, and I think it's great because as you said, the bail is so important, right? Having that bail team. I mean, it can make all the difference in the world in helping a small business kind of navigate the intricacies of business ownership.
Very
Everything,
good. Well,
you know.
thank you, Maria, for telling us a little bit about your journey and for
Yeah,
being here to moderate the day's session. I'm going to hand over the virtual room to you to introduce our presenter and our special guest this afternoon. Thank you so much.
absolutely. So one of the benefits of working in the financial services industry for so long as I get to meet lots of other folks committed to assisting small businesses. And one of those is Constance Nwosu, who is going to be our featured speaker today. Constance is the founder and managing principal of CN Accounting and Business Services. She has over 30 years of experience in assisting small businesses, nonprofits, public and private educational organizations. And she also serves as a business advisor for the Goldman Sachs 1 Million Black Women Black in Business program. So Constance, welcome. And it's great to have you today as we hit the letter A in the B.A.I.L team and hear what you've got to share with the audience. So please do share a little bit more about your journey. I just hit a couple of highlights there, right? But I would love to hear from you.
Great. Thank you so much, Maria. Good afternoon, everyone. As Maria said, I'm Constance Nwosu, the managing principal of CN Business Services, located in Largo, Maryland. I am a licensed CPA. I'm licensed both with the District of Columbia as well as the state of Maryland. I have been in business since 2008, basically helping small businesses to understand their numbers and to grow their businesses. The accountant is someone that all businesses need at whatever size. So I'm pleased to be here today just to share some information so that you can understand more of your financial outlook and move forward. So thank you for having me.
Awesome. Well, please go ahead. We are all ears.
Okay. Great. So I titled this presentation, Unlocking Financial Success, Mastering the Essentials with the CPA. Today, talking just a little about your dream team, which you all have heard, your CPA, your banker, your attorney, insurance, and your certified financial planner. Then looking a little at understanding the role of a CPA and how a CPA can help you in your business. Talking a little about business types, business registration and tax accounts, know your numbers, your key financial statements, accounting software, how those can help you with your business. Looking at payroll, W-2 employees versus contractors, which is an area that I often get a lot of questions in. How you would go about paying your employees, particularly those payroll taxes. And then because we are in tax season, tax planning and compliance. So those are just a couple of the items I'd like to cover today. Okay. What is a certified public accountant, a CPA? Well, a CPA is someone who has the educational credentials. They've passed a rigorous CPA exam. They should be licensed by the state that they're operating in. And as I said, I'm licensed both with the state of Maryland as well as the District of Columbia. And a CPA basically helps you to understand your financial numbers. But we do more than that. We're also your financial advisor, helping you with projections, budgets, helping you to understand the different business structures that your business can fall under, especially when you're just starting out in business. So that is what a CPA is. A CPA, more than anything else, really is your partner in business. You really need to have someone with the financial knowledge to help you through your numbers. We heard last week from the banker that your CPA is the person that should be working hand in hand with your banker when you're going in for various financial for loans and everything, and I wholeheartedly agree. So we are your partner, and that's how you should look at us. Different types of businesses, and I'm not going to spend a lot of time here, but just know that there's the sole proprietorship, limited liability company, partnerships, and corporations. Those are the different types of businesses, and especially for individuals just starting in their business, you should know the types of businesses that you can be organized under. Okay.
Constance, may I pop in with a question here? And you know what I didn't do was thank you for being here during tax season. My goodness, it was special thank you to you
Yes.
for sharing your time with all of us. But on this slide, do you recommend that business owners meet with their accountants before deciding which of these business types is appropriate for them? Or if they happen to start out as one, how difficult is it to switch to another type if they determine that that's better, if they learn later on that that's maybe a better type for them?
I definitely agree that before you decide the business type, you should consult with a CPA because each business type has a different tax structure and different types implication. So have that one-on-one. And that's one of the things that I do with prospective clients who are looking to go into business. We sit down and I tell them the advantages of each of the different business structures, and then we decide based on how they want to grow their business, which business type is best for them. And once you decide which business type, it is a process to change that type with the IRS. So definitely that should be a conversation that you have beforehand as you're thinking about starting a business. So yes, I do recommend that.
Yeah, thank you for that. I also see limited liability companies as being kind of a pretty popular form of ownership. In more recent years, well, it's newer than some of the others, but any particular reasons that stand out as to why that seems to be a good option for a lot of folks?
Well, that is definitely one of the business types that a lot of businesses gear towards. And I think it gives you some protection. You're not a sole proprietor, you're not a partnership, you're not a corporation. So that limited liability structure seems to fit a lot of businesses. Now, one thing about limited liability companies, those are state mandated. So you would set those up with the state. The IRS only recognizes sole proprietorships, partnerships, and corporations. If you're a limited liability company, the IRS will give you the opportunity to choose either to be a partnership or corporation or to maintain the sole proprietorship. And of course, a limited liability company, again, that gives you some liability, limited liability protection. Okay. Business registration and tax accounts. Now, definitely you should register your business with your state. Also, you should register with the IRS to get an employee tax ID number. I do not recommend that you work under your Social Security number when you're starting your business. You want to have employer tax ID number, and it's really easy to get from the IRS. You can get that online. So do not work under your Social Security number. Withholding tax account. Now, if you have employees, you should be withholding taxes. And in order to do that, you will need a withholding tax account, which you will register with the state. And if you have employees that live in different states, you want to register with each state so that you can properly withhold and remit your employees' taxes. Unemployment tax account. This is a big one. Again, if you have employees, states require you to pay unemployment taxes. And that is an expense that the business pays, but you must register for that account. And then if you are selling merchandise, you need a sales tax account. So you should be familiar with the different types of tax accounts that you need based on your business. And I've seen people open businesses, they have employees, they have not taken the correct steps to register with the state for the withholding tax account or the unemployment tax account. And really, when you don't, you're opening up your business to liabilities. Now, here's the fun stuff. Knowing your numbers, your key financial statements. I am an accountant at heart. And this is my lifeline, your financial statements. You as a business owner, you must know your numbers. There's no if and about. If you're operating a business, you should know your balance sheet numbers, your income statement, or more commonly known as your profit and loss numbers, and your statement of cash flows. These are the three primary financial statements that every business should generate, I think, on a monthly basis. And if you're going in for financing, you're looking to purchase assets, you're looking to bid on various contracts, everyone is going to want to know your numbers. So let's take a quick look at these key financial statements. I will not go into them in depth due to our time, but just want you to be familiar with what they look like. Okay, so know your numbers, your key financial statements. I'm showing you a balance sheet, an income statement, and a statement of cash flows for this fictitious company, Justin's vending company. Your balance sheet. You heard last week the banker told you that the balance sheet is only good for the day that is printed on. That is correct. That's why it's titled as of whatever date. The next day, your numbers have changed. The thing with the balance sheet is the order. The cash always comes first because cash is your most liquid item. Then it's followed by accounts receivables, those accounts that are out that folks owe you for. Those come second because you can always call those in. Okay, then we look at your inventory, your prepaid. But there's an, yes.
Could you show your screen? Because we're not seeing that.
You're not seeing my screen?
No.
I wonder what happened.
We could still see that same slide.
So do you see my screen now?
It looks like it's coming up now.
Oh, I'm sorry about that. I'm just
okay. Here we are. I see it.
Okay, I'm so sorry.
It's okay.
Okay. So your financial statements, again, your balance sheet, your income statement, and your cash flow statement. Okay. The order is important. On your balance sheet, you're going to list your most liquid items, those things that you can readily convert to cash. So of course, cash. Then you have your accounts receivables, money that's due you, inventory, your prepaid. Then after your assets, you're going to list all of your liabilities, which you owe, your accounts payable, credit card payables, if you have any loans. But the key thing with the balance sheet is the order. So when you present your balance sheet, you have to list it in such a way that the users know and can interpret your numbers based on your order. Your income statement, that is basically your profit and loss. Again, it's based on a particular period in time. This is your revenues that you've earned and all of your expenses. Again, the order is important. And in accounting, we're big on order. So you're going to list all of your revenues, your cost of goods sold, cost of sales, and then you'll list what I term your overhead items, those items that you need to operate your business with. Could be administrative support, marketing, interest on credit cards, your payroll taxes, postage. So again, the order is important. The statement of cash flows. Now, this statement basically tells how you use your funds for that period. Again, it's the order. We look at what you use for operating your business, for investing, and then financing activities. So these are your basic financial statements. Again, every company should have these, and you should basically produce these on a monthly basis, okay? Because this tells the users how your business is operating financially and if it's healthy financially. Okay. Moving along, accounting software. We no longer do accounting based on a ledger. Everything now is computerized. And there's some popular accounting software out there that businesses can use. Probably one of the most popular one is QuickBooks. I'm not sure how quick it is, but QuickBooks. I know a lot of my clients use it, okay? Then there's Sage, which is what I use. I use Sage for my business. FreshBooks, Wave, Zoho Books. The thing with the accounting software is you want to use something that works for you. You don't need the most complicated accounting software. You need something that's going to help you track your income and your expenses and give you your basic financial statements. And all of these will do that. But of course, you've all heard junk in, junk out. You have to make sure that you put the correct information in. And how do you do that? You do that based on pulling together your monthly activities, either from your bank statements, your credit card statements, your loan statements, okay? But these are some of the popular accounting software tools that are out there that will help you to maintain your financial books, okay? Now, for some businesses, these all come with a cost. And basically, they're all subscription-based. So my clients, the way we work, they will purchase their own subscription. Now, if they come and they say, Constance, this is expensive, I can't really afford this, then I have a license and I keep their records in my system. What Sage allows me to keep up to 100 different companies so I can provide that service for them. Okay, but you should be using something to accurately track your finances and to get you those financial statements.
Constance, may I ask a question here? And maybe you alluded to it earlier, but I would see this a lot of times in reviewing financial statements that were produced by the business owner from their software. Why does it so often happen if you know that you'll see errors like maybe cash or accounts receivable listed as negative numbers? It's got to be, well, maybe that's the junk in, junk out phenomenon that you spoke about, right?
Right. Well, it all depends on how the information was put in. Now, if I pull financials and I see a negative in cash, that's telling me that business is overdrawn. So that's a telling point.
Yeah.
You're spending money that you don't have.
And that would typically be my question. Were you overdrawn on this date? And then they tell me,
Right.
no, I've never been overdrawn. Okay, but this, says.
Yes, yes. So that would be my first question. Then if they say, I'm not overdrawn, then I would have to go through and basically audit their numbers to see what was put in the system and if it was put in correctly. Now, some business owners are savvy enough that they can do their own accounting. Some are not. And I always say, if you feel that is not your strong point, then maybe you need to have a bookkeeper come in or work with a professional, so that the numbers that you are looking at are the correct numbers based on how your business is operating. Right. But you brought up a good point. When financials come into a bank, you all look at them to evaluate. And when you see things that are not correct, then it lends itself up to questions.
Exactly, because then we're not comfortable. And the basis of a loan decision is in part being able to rely on the validity of the financial statements.
That is
So
correct.
you're 100% right.
Correct. Yes. Hmm. All right. Jumping over to payroll. Looking at W-2 employees versus 1099 and contractors. And this is an area, honestly, that trips a lot of businesses up. There's a distinction between employee and contractors. And here I just tried to list out some of the differences. For example, if you, the employer, decides when and where and how the work is performed, that person is your employee. Okay? If that individual is using your materials, tools, and equipment, that also lends itself to that person being your employee. Okay? If there's an ongoing relationship, that person typically is your employee. If you're providing training, you're paying that person a fixed hourly or a salary rate, or you're assigning that person work to be performed, typically that is your employee, okay? And having employees open itself up to payroll taxes plus a lot of other liabilities, okay? Looking at a 1099 contractor, these are your freelancers. These people decide when and where and how the work is completed. They provide their own material, their own equipment. They're not on your email. They work for multiple companies. There's a temporary relationship. Perhaps they're doing a specific project, and once that project is completed, the relationship is over. You're not providing any training support. That person is being paid upon the completion of the project. And again, they decide when and how the work is performed. And I get this a lot. I see people miscategorizing folks that work for them. They're categorizing people as 1099s when really they are employees. And to do that, again, you're opening yourself up to a lot of liabilities, especially if the IRS comes in and audit you. And they see that you have employees, but you're categorizing them as 1099 contractors. So this is an area where I spend a lot of time with my clients, making sure as they're hiring people. I'm not an HR, that's not me. But from a payroll and a tax perspective, I can tell you based on what you're having this person do, their job description, this person should be categorized as a W-2 employee. Okay, so just be mindful as you're hiring people that you categorize them correctly. Okay, and one of the reasons I find that having employees require a lot more work. You know, there are a lot more rules and regulations, and some people are just not set up yet for all of those rules and regulations. But I tell them, the chances, the liability is too great to your business if you don't do this properly. Paying your employees, just continuing. I always advise that you hire a payroll processor. There's ADP, there's Paychex, there's Sure Payroll, Gusto, because these folks know how to properly pay and file your payroll taxes, which is an onerous task if you're not used to doing it. Things have to be filed on time. Correct amount of taxes must be paid, or you run the risk of being penalized with interest and penalties when you don't file your payroll taxes and your payroll reports properly, both at the federal as well as the state level. Okay, so I always say hire a professional. I think the fee that they charge you is a lot less than the headaches that you will incur if you're audited. So this is big. Okay. Now, it's tax season. Are you ready? I always advise to file your taxes on time. And if you're not ready, file an extension, which is free. Now, filing an extension does not relieve you of paying the taxes that you owe on time by the original due date. And I see this a lot. People will file an extension, they will not pay the taxes, and then when they do file their taxes and they owe, then they're subject to interest and penalties from the original filing date, which is April 15th. And I always tell my clients, we can do the extension, but I need you to at least make an estimated tax payment. Come in, let's do the taxes. Let me give you a rough number. And then you can go ahead and pay that. Because the extension really is just for you to get the paper in. It is not for you to file your taxes. And I think a lot of people do not realize that.
I think you're right, Constance. I think you're right. This is great that you're sharing that.
Yeah. Okay. So looking at the due date. Now, there are some tax returns if you're a partnership, if you are an S Corp, those tax returns are due normally March 15th. This year is March 17th because the 15th is on a Saturday. It's an automatic 3-month extension. So that's September 15th. Your regular individual taxes are due on April 15th. If you extend, it's due October 15th. And then for all of my nonprofit clients out there, your return, your 990s, are due May 15th. If you extend, they're due November 15th. This is the regular tax season, okay? So please file your taxes on time, or file an extension. I always tell my clients the easiest penalty the IRS can apply to you is late filing penalty. And it's really one you don't have to have, okay? But it is tax season, so I'm hoping everyone is gearing up for taxes, okay? Hire a professional if you think you need one. Take time to gather all of your tax documents, and this is a big one. By now, everyone should have received all of their W-2s, their 1099s, all of those year-end tax documents should actually be in hand. Take the time, gather all of the information, and if you're missing something, reach out to the organization and say, hey, I haven't received this. And I know now, basically, everything's online. So they, I don't think folks they don't want to mail things anymore. They want you to go online and print it, which is saving them money plus paper. So if you have online accounts, go out, print off all of your tax documents. And I always say, take a weekend, take a day, just go through everything. Make sure you have everything so that when you start preparing that tax return or when you drop it off to your tax preparer, it's all there. I mean, we don't like to constantly touch paper. We just want to sit down with your return, get it done, give it back to you, okay? Pay what taxes you owe. Again, this is a big one. If you owe taxes, you need to pay the amount, and that will help to avoid any interest and penalties, both at the federal and the state level, okay? And then you may say, what if I don't have the money when it's time for me to pay my taxes? You can get an installment payment plan. Now, the interest is still going to accrue on the unpaid balance, but at least that may give you some financial relief in paying that. And I always say, try to pay as much as you can when you file your taxes. I do understand that, for some, you may just not have the amount, but pay whatever you can. And this is not on my slide, but I'm going to make a plug for estimated tax payments. If you are self-employed, you should be paying your taxes on an estimated tax basis, which is quarterly. Okay. And in talking to an IRS agent at one point, they basically said, we expect taxpayers to pay 90% of their taxes throughout the year, either in the form of a W-2 if you are an employee, or through estimated tax payments. So make your estimated tax payments, because that's going to help to relieve the interest that you will pay at the end of the year if you owe taxes on once you file, okay? So I'll make that plug for estimated tax payments. And if you're wondering how do you determine how much you pay, just look at your past year taxes. That's going to give you a good indication, unless your income has severely gone up or dropped. That's going to give you a pretty good idea of what your taxes are going to be, because the tax law hasn't changed. We're still under the 2018 Tax Cuts and Jobs Act, which is due to expire the end of this year. So what your taxes were in 2023, 9 times out of 10 is the same in 2024, 2025. So you have a good idea of what your taxes are going to be to help you make those estimated tax payments, okay? But again, it is tax season, so get those taxes in. That is it. I know it was a lot of information to absorb because accounting always is. But the main thing I wanted you all to know is your CPA or CPA is your friend. To know your numbers, if you're in business, I often hear a lot of people say, I'm not good with numbers. And I tell them, you can't be in business and not be comfortable or know your numbers. You don't have to be a professional, but you at least need to know whether or not you're running your business at a profit or a loss. You at least need to know that your taxes have been filed on time. You at least need to know how much money you're bringing in. Okay, so you don't have to be an accountant, but you also have to know your numbers. Okay, this is my contact information. If anyone wants to reach out with questions, I'm happy to answer questions and so forth. So thank you, Maria.
Yes, awesome, awesome. And I'm envisioning like a plaque on your wall that says your CPA is your friend. I love that. Or a lapel pin or something that
Yes,
says
yes, 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 yes.
that.
So
Wonderful,
I'm going to stop
wonderful.
sharing now.
Okay.
Okay. Yes.
Great information and
Mhm.
timely information. And I know in a minute Amanda is going to open up the floor to questions that she's been accumulating. It looks like there are a few in that box. I'd love to slide one in, and thank you again
Mhm.
so much, Constance, for doing this,
You're welcome.
especially during tax season.
You're
You pulled
welcome.
yourself away to come and share these nuggets and share this timely information. And since it is tax season, this is a question I imagine might be on some folks' minds. Can you just share just a little bit about some typical business expenses that they can be deducting that they may not be aware of, that
Yes.
there's still time to get them in?
Yes, yes. Great question. Some typical business expenses that you can deduct, of course, your cell phone, supplies, business meals, with a caveat, they're 50% deductible. Your leases, is perfectly fine for businesses to lease vehicles, and those are deductible business expenses. Your travel, internet. If you are a home-based business, and it means you're operating your business from your home, don't forget the home office deduction. You can deduct certain expenses for working from home. And that is sometimes, believe me, that can be the difference between you owing and you breaking even.
Awesome.
Okay,
That's a great one.
yes. For mileage. Now, using your personal vehicle, you must track mileage. So you should have a mileage log, I'm sorry, or a mileage app.
Oh, goodness.
That says where you went for business, the purpose, the total. But using your personal vehicle, you can deduct business mileage. You just have to track it. Those are some of the typical ones. Of course, your subscriptions and dues.
Right.
If you work, if you have an office building, or you work in an office, of course, the office rent.
Right.
I'm always having to have my fire extinguisher service, so I can deduct that. Insurance, your business insurance, professional liability insurance. So those are some of the expenses. And I often tell my clients, you can deduct any expense that you need to operate your business. If it's something not ordinary, you just need to have it documented that I needed this for my business. Okay. And I know I didn't spend a lot of time on documentation, but you must have everything documented, either electronically or the old system in a file cabinet. You have to be able to document your expenses. You have to be able to document your revenues, keeping those invoices that you're sending to your clients. Because if you're audited,
Yeah.
you will need to show that third-party documentation as your proof. Okay.
Awesome.
Yes.
Awesome. A wealth of information. Thank you. Thank you again so much, Constance. And I know, Amanda, we'll turn it over to you I know there's a bunch of other questions for Constance while we have the time. Thanks again.
You're welcome.
Thank you, Constance. Thank you, Maria. So actually, the first question is from JR. and they state, I have a Canadian company and recently opened a subsidiary in the state of Delaware. Both companies are kept separate. Would you recommend 2 separate CPAs, one in each country, or just one CPA?
That is a great question. You could go with one CPA if they're familiar with the laws of the other country. Now, if the Canadian CPA is well-versed and licensed to also operate in the US, yes, and vice versa. Otherwise, you may want to have 2 because the laws are so different and they should be licensed in the state that they operate in. So that's a great question.
Thank you. Another question is, to be DCAA compliant, we have to have our books as accrual, but we do our taxes as cash basis. How do you do the accrual to cash conversion?
Okay, so a technical question, but what you would do, your accrual includes all of your receivables, all of your payables at the end of the year. You would have to pull those out to convert it back to cash for your taxes. So on your tax return, you will not include like what your outstanding receivables are, what your outstanding payables are. Okay, so that is how you do it. I also keep my books on the accrual basis, and that's the exercise that I go through when I'm preparing my taxes to convert it. I pull out anything that's not cash based, the cash I didn't receive or the cash I didn't pay, because that's how you will do the accrual conversion.
Thank you. Next question. I had trouble finding a CPA that I could work with if I didn't also use them for bookkeeping services. Do you have any recommendations on how to find a CPA that will just do the taxes and some financial advising without requiring bookkeeping as well?
Oddly, you would say that because most CPAs don't want to do the bookkeeping. They don't want to do they don't want to do the bookkeeping. They basically just want to do the financial statements and the taxes. I just think you would just probably have to, just talk to a number of CPAs, understanding what it is they do, and just becoming comfortable with them. Now, if you don't want them to do the bookkeeping and they do, then that's probably not the right CPA for you.
Thank you. How do we manage taxes for overseas employees?
Well, if they are US citizens, then all of their income, worldwide income, is taxable. And I do have a couple clients that are US citizens and they work outside the US, but all of their income is taxable. Now there is a foreign tax exclusion in the tax code.
Awesome. Thank you. Please share what considerations one must have before changing from LLC to S Corp. And is a S Corp filed with state and IRS?
The S Corp paperwork filed?
Yes.
Yeah. So a S Corp is really a corporation. It's just a sub corporation. So you would have to file the paperwork with the Secretary of the State to be considered a corporation. And of course, if you are an LLC converting to an S Corp, you would then have to get a different EIN number from the IRS, because the IRS does not issue, that's a different tax filing, I'll say it. And so a S Corp files an 1120S tax return, where an LLC basically files a Schedule C. So you would have to re-register with the IRS to get a new EIN number for that S Corp. Also, the S Corp tax return is due March 15th, whereas the LLC is due April 15th. So again, that would require you to do to get a different EIN number from the IRS. But yes, you would have to file with the Secretary of the State for your S Corp because that's a corporation and they require a little bit more paperwork when they're setting up corporations.
How do you handle when you sell off assets like old computers, vehicles, or furniture? Is that taxable revenue?
All income, well, if it's been fully depreciated, which means you've basically written off all of the expenses, and then if you sell it, then yes, that is income.
Thank you. Can you explain more on the employee contractor relationship, which is easier for a small business?
I cannot say which is easier. I can tell you what the law says. So you would have to evaluate what that person is doing for you to see if they meet the criteria to be an employee or if they fit the bucket to be a 1099. And what I can tell you is you must do what is legal and correct. So if the person that's working for you fits the profile of an employee, then you must and you should hire them as an employee W-2. Hence, you will then have to pay payroll taxes, your portion of Social Security and Medicare, federal unemployment, and state unemployment. And as I said, this is one area where I see people often get in trouble because they either can't afford all of those payroll taxes, or they just don't do the classification correctly. And then when the IRS comes in and audit them and deem these individuals employees, then you have to now pay all of those taxes that you did not pay, plus interest and penalties. So I say do it correctly initially.
Okay, thank you. I think last question for now is, we've seen LLCs that file taxes as corporations and partnerships. Is that something that they work out with their accountant or through the IRS?
Yes. So when you file to get your EIN number with the IRS, they allow you to file or select that you want to file your taxes as a corporation or a partnership. So yes, and that's important when you are filing and registering for your EIN number. You need to pay particular attention to the entire form, because if you do want to file your taxes as a corporation, you have to make that election with the IRS, because then on your EIN letter, it will tell you which type of tax form the IRS is expecting from you. And I've had this happen where clients will say they're supposed to file, for example, a Schedule C. But once we do the filing, the IRS comes back and say, oh no, we have you set up to file an 1120, which means they elected to be taxed as a corporation. Okay, and remember, each tax has its own system. If you're a corporation, you're taxed at a flat 21%. If you're S Corp or a partnership, the net income or loss passes through the owners and is taxed at their tax rate. So it's important when you're registering your business and you're registering for your EIN number that you pay particular attention to the form and make sure you know what you're electing on that form.
Thank you.
Wow, these were some great questions,
Questions, good
everyone.
questions, yes.
Some really, really good questions. I mean, you just learn a
Yeah.
lot just listening. And they did not stump you one time, Constance. I am impressed. I am
Thank
impressed.
you.
But no, really, thank you for the great questions. Constance, thank you so much again for your
Thank you.
presentation and for those great and very helpful answers. We're about to wrap up. And before I turn things back over to Sonya, just want to say we're meeting back here next week, next Wednesday at 12 noon. We're moving on to an I in the B.A.I.L. B.A.I.L team. Well, two I's that we're going to have in our B.A.I.L team workshop here, where next week we're going to have Adrian Wilcox and talking about insurance, Adrian Wilcox from State Farm. So we'll look for all of you to be in there. Thank you, Amanda and Constance and
Thank you.
Sonya. It's all yours.
All right. Thank you. Thank you both. And let me just reiterate again, Maria, Constance, not one question stumped you. So I could see you thinking, so that just goes to show that there's a wealth of knowledge there in terms of your experience. And that's why we've really kind of curated a really, really good group of individuals to do these presentations, because we want to give as much information, valuable information as we can to our business owners. So thank you again. And to everyone, if you didn't get your question answered, we apologize. We're trying to keep it tight in between that 12 and 1 o'clock hour. But Constance has been very gracious in saying that she will answer your questions. So don't mind sending her an email if you have any questions, and want to follow up with her in terms of working with her. And we thank you all for coming out. So thank you again, Constance, and thank you, Maria, for moderating the session this afternoon. And for everyone, thank you for joining us today. As a reminder, the presentation and the recording will be sent to everyone who registered within 24 to 48 hours. We hope you enjoyed the content provided to you today by Ms. Constance Nwosu. Next week, grab a beverage, a lunch, and a snack again, and join us for a conversation with our featured insurance agent, as Maria just mentioned. Until next week, onward and upward. Have a good afternoon, everyone.